what I'm going to go over is a little bit about preparing your proposal. And so I will reiterate a lot of what Chuck said about eligibility, um, in terms of being a business, in terms of being small, in terms of being rural, also uh, costs that are eligible and aren't. Um, and then I'll also provide some so, like we pointed out, REAP seeks to promote energy efficiency and renewable energy development for agricultural producers and rural small businesses. There is that guaranteed loan program instead of grants. We're really not going to talk about guaranteed loans much, though, although you can do those in combination. And if you are interested, I would encourage you to reach out to your regional rep with USDA-Rural Development. You've met all of those. Okay, so it's 8 different categories of renewable energy production. Like Chuck pointed out, wind, solar, the anaerobic digester, hydro, and geothermal. And you'll see the term RES a lot. That means renewable energy systems. You also have energy efficiency improvements, which Chuck talked about. That's EEI. You'll see that term a lot. And so that's to promote energy efficient improvements for ag producers and small rural businesses. So moving to 2, and there's a further list of the RESs. So biomass, things like ethanol and digesters, geothermal for electric generation or direct use, even hydropower, small hydropower, hydrogen. I don't know if anybody would be doing that, but it's a possibility. Small and large wind generation, small and large solar, and stuff with oceans, which of course is not feasible here. Okay, go ahead, Sridhar, thank you. The energy improvement efficiency funds may be used for the purchase, installation, and construction of energy efficiency improvements, HVAC systems. So if you want to put a new HVAC system in, that could be covered 25% of that. Installation, lighting, and as Chuck pointed out, lighting is very popular. LED lighting saves a lot of power, saves you money. Besides that, lasts longer. Cooling or refrigeration units, doors and windows. People use a huge amount of energy through windows, so those could be replaced. Pumps of various types, going from a diesel to electric irrigation motor, for example, and replacement of energy inefficient equipment. Okay, so those are some examples of things that would qualify. Okay, what type of businesses are eligible? Well, farmers anywhere that get at least 50% plus of their net income from farming. And so if your household income on your tax returns from a non-farm job is greater than your farm income, you're not considered a farm for purpose of this program, okay? Or small rural businesses. And so we're going to cover what we mean by all that. Okay, agricultural producers are eligible regardless of location, as long as you meet that definition of what an agricultural producer is that we just talked about. And so they can use grant funds in helping to install energy efficient equipment and systems for agricultural production and processing. So if you're in Shelby County in an urban area, you could still qualify. Majority of gross income, like we said, must come from the farm to be considered an ag producer. And that determination is typically, or really, I think always, based on 3 years of federal tax returns. So in the form itself, you would have to put in your 3 years of income from the farm that you indicated in your federal tax return. And that's how you'd meet that. They could tell if you met that qualification, that and your other, any outside farm income. Okay, how about rural? Chuck talked about this, but you must be located in a rural area, and that's defined as not a city or town with 50,000 or more inhabitants, as well as urbanized areas surrounding that. And so the project must be located in the rural area. We had this question before. The headquarters can be urban. So as long as you meet the size definition, you could be a company that was even out of state, but if you had a factory or whatever in Tennessee and you were small enough, you would qualify if you were in that rural area. Um, and you can check eligibility in terms of whether you're rural urban simply by clicking on this link. And what that will do is it'll send you to a screen, and then you just click this program in that screen. Then you just simply add your address in as indicated up there, kind of the left-hand top there, which I did, where that go button is. And I did it just for, yeah, thank you, Schroeder. I did it for an address in Milan, and sure enough, it indicates that that address is eligible. Now, I typed in my home address, and I live in the suburbs of Knoxville, and it indicated it would be I'm in an ineligible place where I live. So it will tell you that right away. And so you can check that today if you want thinking about moving forward. With the very few exceptions, you must be a small rural business. Most nonprofits are not eligible. I just had a conversation with somebody this weekend about that. And so, for example, associations like soybean boards aren't eligible. Nonprofits, for the most part, are not eligible, but an exception is cooperatives. If you're a cooperative and you're a nonprofit, you're eligible. If you're an electric utility and you're a nonprofit, you're eligible. Or if you're a tribal corporation or other, Native American tribe business entities, then you're probably eligible. That doesn't really apply very much to Tennessee. I guess it could maybe in some cases. Okay, now we're going to talk about size. So size designation for small rural businesses. You must meet this SBA designation like Chuck said, or down at the bottom, you can meet these other two requirements. So you could, if you have maximum tangible net worth that is not more than 15 million, and your average net income after federal income taxes for your business for 2 full fiscal years before the date of application, so it would be last year and the year before, is not more than 5 million, then you don't have to meet the SBA designation for your North American Industry Classification System code, whatever you fall into. But I think virtually everybody uses the SBA definition under their what we call their NACE code. Okay, and so that is based on either number employed or gross income, and there's the link that will take you to that link will allow you to check and see. In fact, you enter in what your business is, your NACE code, and then your revenues or your employment, and it will tell you if you're eligible or not. But moving on to the next slide, Schroeder. This is just an example. So this is SBA small example based on employment. So if you're a dog and cat manufacturer and you're under 1,000 workers, employees, then you're eligible. And so the previous example we had, or a question we had, when somebody said we have an out-of-state headquarters and then we have a facility in Tennessee. Well, if you employed 200 people in Tennessee and 300 people at the headquarters or elsewhere, and you're a dog and cat manufacturer, then you'd be fine because your total employment for that business or that corporation is less than 1,000. Okay, so they look at total for that entire operation or business, not just the one location. Okay, in some NACE codes or types of businesses, the designation is based on just gross revenues. What's the value of the sales that you bring in annually? And you can see for like a hardware store, it's 8 million. For a convenience store, it's 32 million. If it was a meat market, it'd be 8 million, okay, in a rural area. Okay, so moving on to requirements, what's required? General requirements, the applicant must provide at least 75% of the project costs if applying for a grant only. And I'll just skip the loan. All projects must have technical merit and utilize commercially available technologies. in energy efficiency projects require an energy audit, talk to your state office or rather your local office about that energy audit though before you do anything. But you have to meet these requirements. Those are the size designation, and Chuck has covered those, so I think we'll just skip that. But you can go back and read that if you want at your leisure. Okay, you got to demonstrate that if it's generating energy, that RES, or if it's improving energy efficiency, the EEI, it will be operated or performed over the project's useful life in reliable, safe, and cost-effective manners. So you got to address project design, installation, operation, and maintenance. And you can separate. You can't submit two separate ones, but I don't think I'd recommend it in a given federal year. And you can look at a possible combination of grant and loans, but once again, I would talk to USDA-Rural Development about that before moving on. But they are interested in also helping bankers provide loans through their loan guarantee program. So in that program, USDA-Rural Development's not the banker. You work with the banker or a lending institution, I guess more generally, but they will work to guarantee that loan for the lending institution. So that's the role that they play. And they are some specialized sort of lenders that I think will be talked about later in the energy area. You need a proposed scope of work, which is a brief summary, including the project title. You want to talk about the goals of the project, like we want to generate X amount of kilowatt, per hour with our, solar installation that will serve purposes of running our electric fence and, providing power for various pumps, for example. You want to indicate the service area of the project, and if relevant, the method and rationale to use to select that. That's really more if you're supplying others. So if you were generating solar energy and you were selling that to somebody else, then you'd have to talk about that. Okay. Timeline and marketing strategy. So once again, if you're supplying others, you'd have to talk about how you would market to these people. The timeline describes proposed tasks to be accomplished and the schedule for implementation of each task, and including whether your own staff or consultants or contractors will be used to perform each task. So generally, you're going to work with the contractor, say to put in solar panels. And so you'd have in there like we're hiring firm X and they're going to do, X, Y, and G, and they're going to do it within this time period. And so you'll need to lay out a timeline when you talk about all that, in describing your project. Really, it's more, you talk about your own experience, but your service provider's experience. So, if you get somebody that's installing solar panels in for you or energy for them for you, you would want to talk about their experience in doing similar projects, including the number, some indication of the number they performed and how long they've been doing this. And so in any kind of relevant experience, you might have or they might have other relevant experience. And in terms of the energy audits awards, you need to indicate if you have any of those done in the last 5 years, you want to describe the achievements of the award. So if you've gotten this before, or if you've done an energy audit before within the last 5 years, you want to talk about how you use the audit to save electricity usually. Matching funds. Match is cash, really. In this project, there's some USDA rural development programs where you can have what we call in-kind match, but here it's almost always a cash match. And so you'd want to identify the amount of it and the source of it that you're going to use for that, and have a written commitment. And if it's your funds, you must demonstrate with your bank statement. So you'd have to literally include that bank statement in, like we're putting in $100,000 our own money to this project, and here's our bank statement indicating we have it. And if it's a third project, which really means you're getting it from a typically from a bank, a loan, you must have a commitment letter, which is signed by the bank president or whoever's making that loan to you, authorizing that this has been done. Uh, and it must be specific to the project, stating that in the letter and the amount of money they're going to loan you. So you need a letter from your lender with all the specifics, amount in terms of loan, stating loan is specifically for the project. That's what that means. Okay, so you need to meet that requirement. If you have any project or any ongoing REAP projects, you must be making satisfactory progress on those previously funded projects before being considered for this round of funding. Okay, so that's at least 50% of the previous award. 50% of that money, that grant money, should have been expended by the end of this past January. Otherwise, you're not eligible for funding in this round if you have a previous Rural Energy for America project. The energy improvement efficiency requires an energy audit. Now, USDA doesn't have a list of qualified energy auditors. When you talk to the Tennessee people at the regional offices for Tennessee, they might be able to give you some names, but the USDA doesn't maintain an official list. But regulations do divide the credentials for an audit or auditor or assessor. It's a good idea to think about contacting your local power company and have them set up TVA to do the audit. Tennessee Valley Authority does a bunch of these, and I think we'll be talking a little bit about that this afternoon or later this afternoon. But you need to go through your local power company to get that. So that's what we would really recommend that you do. Tell them what you want and have it set up for them to do it if you are doing energy efficiency. But there's what qualifies. So if you're certified by the Association of Energy Engineers, or you've been a licensed professional engineer in the state, and you've done enough of these and have enough experience, and so you could read that at your own. All of these people or people with all of these 4-point credentials would qualify. But it'd be easier just to go through TVA to do it using your local power company once again. You'll be asked to indicate total project cost on the form, and that's the sum of all costs associated with the completed project, included in eligible costs, which we'll talk more about later, and eligible costs regardless of the source of the funds. So it's just everything you're going to pay for this project. Okay, so if it was a wind turbine, as an example, you must include all costs associated with the completed project, including the turbine, the tower, the foundation, and all the electrical work that would be done for that wind turbine. Okay, anything that would be done to get that thing up and running, you would include as your total project cost. For retrofitting an existing renewable energy system, you would include the costs associated with the modification and replacement of the existing components. For example, if a tower is already in place, but the turbine needs to be replaced, then the cost integral to replacement of the turbine would be considered as a total project cost. For EEI, it's what is actually the energy savings. So for example, say you wanted to put solar on your roof of your barn and you were going to use that in your farm operation. At the same time, you were going to replace the roof of your barn. Replacing the roof is not an eligible cost. It's a total cost, but it's not an eligible cost for the grant. But paying for and installing those solar panels is an eligible cost. So you need to work with USDA Rural Development this whole time in figuring out what's eligible and ineligible. Because on these types of grants, and this isn't the only one that's like this, we do a lot of work with USDA Evaluated Producer Grant. A lot of times, what gets an application kicked out is you put something in that's ineligible and it really can't be fixed. Okay, so try to have something that meets the requirements for you turn it in. Working with the personnel in your regional USDA Rural Development Office. So there's eligible project costs, purchase and installation of new or refurbished equipment. You know, that's energy related, construction, retrofitting, replacement and improvements. Uh, EEI identified in the applicable application the energy assessment, energy audit. So you got to have that audit indicate that you need that energy improvement before you can ask for it. Okay. So if you have an auditor that comes in and says, yes, by putting in new windows in this building, you'll save this amount of electricity in a month, then windows are eligible. Fees for construction and licenses, professional services for qualified consultants, contractors, installers, and other third-party services. When a residency is, we had a question about housing residency, and typically they aren't anything to do with the residency is a no-no, but when a residency is closely associated with the rural small business or the ag operation, the installation of a second meter to separate the residents from the portion of the project that benefits the rural small business or agricultural operation is an eligible project cost. So paying for that second separate meter would be eligible. Okay. So, the point of all this is to just show you that things are tricky and definitely work with the people that you have to work with. Uh, Agricultural tillage equipment, used equipment for agricultural purposes, straight agricultural purposes, and vehicles, as Chuck pointed out, even though you would think an electric vehicle should fit, is ineligible. Residential projects are ineligible. And this is a point I think I tried to make earlier. Construction or equipment costs that would be incurred regardless of the installation of the project. For example, the foundation for a building where a new energy system is being installed, like a storage only grain bins connected to the drying system. Your grain bins are going to be there whether you're going with an improvement in energy or not. So that wouldn't be covered. Okay. But the solar panels or whatever would be. And the roofing of a building where solar panels are being attached would not be covered. Businesses that get more than 10% of annual gross revenue from gambling activities or operations aren't eligible. And I guess that with sports betting in Tennessee now, maybe that matters a little more. Legal sports betting, or from activities that are sexual or illegal activities, of course. Lease payments aren't eligible. If it creates a conflict of interest and appearance for it, it's not. And of course, you can't fund politicians or lobbying, and you can't use it to pay off, a federal loan or whatever, or other federal debts. Okay, you must include all environmental review documents with your supporting documentation, but talk to USDA field specialist, the regional office, before you do anything with this. They do have a checklist document, and that can be used to work through the process. And in fact, the next slide will show just a little bit of that. But check with the USDA field specialist before you do anything here. But you're going to be talking about possible impacts on wetlands, trees, historical sites, endangered species, farmland, hazardous materials, state federal parks, water resources, minority or low income populations, municipal wastewater, and locations that are non-compliant in terms of air quality. That sort of has to be addressed, or these have to be addressed in the form. And you would include additional documentation as needed. So if, say, an addition endangered species or critical habitat was within the area of your project, then you'd have to file the appropriate report for that. Okay, but talk to the state office first, or rather your local office, your field specialist first. It's not as daunting as it looks. Okay, and this is just the first part of that checklist if you do end up using that, but you probably won't have to yourself. Okay, we're kind of getting more into scoring. The amount awarded or considered in determining the amount of the grant awarded, or if it's rewarded, the agency will take and consider the six following criteria: the type of a renewable energy system to be purchased, estimated quantity of energy to be generated, estimated environmental benefits, the quantity of energy saved from the EEI is expected to be derived from the activity as demonstrated by the energy audit. Okay, so you'd work with your auditor. The estimated period of time for the energy savings generated by the activity in comparison to the cost of the activity, or the kind of the profitability really, and the expected energy efficiency of that renewable energy system. Good. So that's kind of a mouthful. So we're going to kind of look at some, maybe where it makes a little more sense in project scoring. So if you're an investing business, you get a maximum of 5 points. If you're existing small rural business or existing agricultural producer that qualifies, that has been in operation for at least 1 full year. And so your tax return is the best documentation. Okay, and that really I think would be in there already, especially if you're a farmer. But if you have no historical, a pro forma financial statement with projections could be included. Okay, another, as indicated, another scoring criteria is simple payback. Okay, and so it's a maximum of 15 points. So energy efficiency projects, simple paybacks is total project cost divided by the dollar value of energy saved. And so energy consumed minus projected energy consumed. Okay, so you're looking at, with your new system, your auditor will tell you what's the energy that you will be consuming, and you compare that to your historic record. So like your electric bills, over the last year or two, you'd be looking at items like that, okay, to get that estimate of how much energy you're going to save. And so you'd be using like this score sheet, and this is actually in the one of the forms that Chuck talked about. So you use a score sheet. It's just basically a spreadsheet. And this is an example I took from another presentation where they were looking at biogas generation. That was the new energy. And they proposed that 300,000 MMBTUs were going to be generated, and they looked at the dollar value of that and came up with a gross income from the energy sale. Okay, so this is a valuation of how the value of that power that would be generated from the project. And so if you go back to the next one, this is an example of a simple payback. You'd have a total project cost over here, which is about a little under 5 million. I don't know how well you can see that. You look at the dollar value of the energy sold, and so you'd look at gross income, energy sales, and your operating costs, and that would give you your EBITDA, which is earnings before interest, tax, depreciation, and amortization. It's a common term in business. And it's basically an estimate of gross profits. And so you'd use a beta in your payback calculations. Okay. And so moving on to the next one, we can see that. So in this example, we have a beta of about $450,000. And so in this case, for the anaerobic digester, the simple payback is the total project cost divided by a beta. And so it'd be 5.5 years. So you need to indicate, how long it will take, and it will be scored on, this payback in terms of profitability. So that simple payback point scoring, you're scored on your project. So in the previous example, we saw it was 5.5 years before with the payback. So you'd be less than 10 years, so you'd get 15 points awarded. Uh, if you're 10 through 14 years, you get 10 points awarded for the payback to occur. If it's 15 to up to or 15 through 25 years, you get 5 points, and longer than 25 years, no points. And frankly, if it's longer than 25 years to get that payback, I probably wouldn't bother to apply for renewable energy systems. For the EEI, if it's less than 4 years, 15 points will be awarded. Uh, four, four to 4 through 7 is 10 points. 4 through 7 years. 8 years through 12 years, it's 5 points. Longer than 12 years, no points. Another simple scoring criteria is the size of the request. So if you're asking for less than 250,000 for renewable energy system, or less than 125,000 for energy efficiency improvements, you'll get 10 more points. Okay. And so, for example, if you had a project that was 11, let's say 1.2 million, you might consider not asking for, the full 25% because you'd go beyond that $250,000, on your grant. Because you want to think about these points, you would need to consider that. Commitment of funds for the total project cost. If you match 50% or more of the grant funds requested, you get 20 points rewarded, and so on and so forth. With less match, you get less points. And like I said, this is going to be a cash match, and so I guess this would be your own funds. The more you're putting in of your own money as opposed to getting a loan, the more you will get a higher score here. The environmental score, you'll be working with your regional office on this, but if you can demonstrate positive impacts in these three different areas, you'll get 5 points. So resource conservation, if what you're doing helps conserve water or soil, or a part of a forest, if you can demonstrate that, that's a point. If you're doing things like improving air quality and potable water, that's a point. And so, for example, you'd have to ask USDA-Rural Development about this, but I'd say if you're putting in solar panels and that's green energy, and you're not buying off the grid, and some of the, a lot of that is still generated by burning fossil fuels, then you can make an air quality argument there. Okay. And the environment, and that's just complicated, EPA rules regarding greenhouse gases emissions and particulate matter. You'd need to make arguments there. But once again, you'd really need to work with rural development on this. Okay, so experience of the organization in conducting that energy audit. You get a maximum of 25% here if they have more than 10 years experience of who you've hired to work with. Uh, and so on and so forth. If it's less than 10 years, 10 up, not 5 up to 10 years, it's 20, and so on and so forth. So these are just ways that you can use to enhance your scoring on this. So you'll be the one that, will hopefully get this funded. Um, and the national office in a webinar recently indicated that typically, uh, and the rural development people can correct me if I'm wrong, but typically about 1,000 of these are funded each year. So, we want a lot of these to come into Tennessee. We think it's a real opportunity to improve the bottom line and the energy efficiency of your farm operation or your small rural business. And we would encourage you strongly to think about applying.